Apple, Darden, the inverted yield curve, and eSports are what TheStreet's columnists and editors are watching. I'm Catherine Ross, live at the NYSE with Jim Cramer. Jim, investors have a lot to think about. Let's start with Apple.
Yeah, look, if you had an ideal scenario for the bulls, it's Apple stock being down huge ahead of the offering of these new products, and that's what's happening now. The stock was at $1.75 when I started on Squawk the Street saying, "Don't own it, don't own it, don't own it." If you're a trader, you got to sell, you got to sell, you got to sell. I think that that was a lot of people took the cue from the show. I'm not saying how powerful it is, but I did say, look, I really believe in Apple, but you don't want the stock higher going into the product offering. You want it lower. And that makes it so that the shorts are less likely to fly in and blast it down because it's not a good trade. If you're a short seller, you don't want to sell it down 3, hoping it'll be down 5. That may be too hard a couple buck earned.
TheStreet's Annie Gauss reported that she doesn't think that the Apple stock will really be affected by
Annie's
this.
piece was excellent and talked about what it could be offered. I know from behind the scenes that there is a lot of talk about who's in the bundle, what paper, what newspaper, what journalists in the bundle, and the cut that Apple wants, which is higher, I believe, than what Apple gets right now from the App Store. But it doesn't move the needle. I think that you got to take. I'm told you should take with a grain of salt what the Wall Street Journal's reported so far. I as well. I mean, look, I have to tell you, this thing's really locked down. I mean, I've tried every single way to get what's going on. Everybody's just got to stay tuned. But I like the fact very much the stock is down. Now, the overall market is down, and there are a lot of reasons. I mean, I did a piece this weekend because I like to do pieces now on Sundays for real money because I know a lot of people come to the site. And it was a piece about how it's not just the global slowdown, but you're starting to see the selling in high multiple stocks in order to have money to buy Lyft and Pinterest. Very few people believe in this. I mean, someone accused me, said, listen, Jim, WTF, did you go to college for that? And I had to explain that I took a really good course in my junior year in 1976 about selling Salesforce and ServiceNow stock in order to pick up Motorola and Texas Instruments.
In that piece, in that Real Money column piece, you wrote that the inverted yield curve was kind of due back to the Fed's decision to raise.
I mean, look, I know Jay from previous, okay, acquaintance. And I felt terrible having to say, look, the economy's really slowing. I know that you already committed to rate hikes, so there's nothing you can do. You got to get the rate hike. But I was probably the most vociferous in the country about the slowing economy. There was tremendous, even in the media, pushback that I was wrong. I was basing it on speaking to CEOs, not on the broad macro data. And that's kind of a piece that I had this morning about dealing with CEOs and trying to figure out how bad or good the economy is. The slowing growth thesis, it's funny, Catherine. When you hear the same thesis over and over again, eventually you just say, yeah, we're almost there. This Brexit. I mean, I was watching this May. I mean, if May were to resign, the markets worldwide would go higher because they need someone.
Including the U.S. market?
She needs to throw herself on her sword and say, listen, I'll step down if we get a deal. The U.S. market is, the U.S. market is clouded because Europe is 770 million people, and they got to get it together. Now, we had a big, this is how convoluted things are. There was a big decline in Japan last night, and people say, wow, there's the beginning of something new. No, that's like following up with our markets being declined, because that's the worldwide slow growth thesis. I prefer to think it's the lack of money thesis, lack of, thank you, Matt Horween, going back and forth with me, a writing partner, saying, look, maybe there's just not enough fuel to go higher. We need more money to come into the market and into mutual funds that pick stocks, not into ETFs that are brain dead. And the brain deads are going to win. Now, why do I call them brain dead? Because they're brain dead.
I want to circle back for a moment to the inverted yield curve because
Yes.
I have a question for you that I think is a prominent investing education question, and that is, why should investors pay attention to the inverted yield curve?
Okay, because you have to pay attention to the inverted yield curve because there have been no recession. No recession in the history books was not preceded by an inverted yield curve. So in other words, every time you see one, we all start thinking the pattern behavior is, well, we've seen that before every recession, so we have to presume there'll be a recession because we've seen that. Now, by the way, there was some very good work done by Bespoke about how you should not necessarily feel that it's the world's over. Like there's actually, as soon as the yield curve inverts, actually there's been a lot of good times. I think the yield curve is inverting artificially because if you're in Germany, let's put it this way: Germany has money. Wealthy German institutions that are not committed to Germany. Well, how can you not buy our treasuries at 2.5 when theirs are zero? So if you have something in your charter which says, okay, listen, there's no way that you can leave Germany with your money, well, then you wouldn't. But if you had the freedom to invest, you would invest here. And you would go buy dollars, and then you would go buy bonds. So it's a little artificial.
All right. Now, I just want to tell members and to tell everyone watching Facebook right now that we still have some serious topics to go over, including esports, which I'm really excited to talk to you about. So make sure you stay with us to hear Jim's thoughts on that. All right. So, Jim, let's go over Darden. What you wrote about it on Real Money
Darden
today.
Is really important. 2,000 stores. By the way, 2,000 stores. There are people, quite frankly, who I'm tired of. Hey, listen, by the way, I'm saying a lot of stuff that's like vicious, just so you know. People I'm tired of.
Wait, why are you saying a lot of stuff that's vicious?
Because I'm sick of people who don't do work or they rely on the spoon-fed numbers from the government. You have to read these conference calls to recognize that Gene Lee, who's got the pulse up. I mean, I've met Gene Lee a couple times. Gene Lee is the CEO of Darden. Boy, does he ever know a lot more than the Labor Department. And he's saying, look, things are robust. By the way, that quarter was amazing because labor costs actually went down for the gross margin. It went down as a part of the percentage because of some decisions they made to simplify the making of food, and also because they had this chicken Alfredo with 50% more chicken. I do feel very strongly that when you see a management that says things are quite good and they have 2,000 stores, you better listen. And people just presume that there's some gloom that we're going to get imported here from around the world. Well, there is, a 2,000 restaurant chain is a good tell of what's going on in the country. So I urge people to read my piece about Darden, and you'll recognize why I remain sanguine about the American consumer. Remember what my view is. It's first put out there by Neil Bushry from Workday. My theory is corporate spend is strong. Consumer spend is strong. Government spend is bad, and government activity is bad. And that's where I think,
your subhead.
Nike's coming back. That's good. I want Nike up.
Why do you want Nike up?
Well, because I thought Nike was actually a good quarter, and a lot of people sold it down, and they should be buying Nike.
I just want to circle back real quick and talk to you about the Real Money column because your subhead made me laugh this morning. Your subhead was the U.S. economy is just as good as Olive Garden's chicken Alfredo.
Well,
do you think that that's true?
Look, I think that I've used Olive Garden as a measure of enthusiasm ever since Gene Lee came in. Previous management really fell down on the job, and you couldn't use it as a barometer because their execution was bad. Gene's execution has been excellent, so I think he's a great tell of consumer enthusiasm. And by the way, now a lot of this is, I believe that Wall Street's filled with snobs. My daughter's a vegetarian, and we absolutely love going there. Because, if you're a vegetarian, you always check the menu beforehand, and it's got tremendous vegetarian dishes. So I go, and it's a great problem. When you see it's packed. We try to game it so it's not, when there's not a big line. But the conference call's a clinic. It's really good.
So you frequent Olive Garden?
Yeah. I got one on Route 10. It's really good.
I can't remember the last time I went to Olive Garden.
Oh, it's really good, man. The rolls are good. The
breadsticks. I do love the breadsticks.
I like it. I'll have the salad. It's quite good. It's quite good.
Yeah, I mean, I think that one thing you're saying that consumer enthusiasm is judged by that too, but
it's better than what you'll see some labor report and they'll say that there's employment, blah blah blah. But when you see the check going up at a place like that, that's America.
But are millennials frequenting Olive Garden?
We don't know. They didn't break it down. We don't know. We know that on a baseline, it's up, and that's all I can tell.
All right, Jim, I want to switch gears because I want to talk to you about esports. Now, this is something that both you and I have talked about off camera, and I got to say, it's pretty amazing because in 2019, it's expected to hit over $1 billion, which is incredible.
That's why we're in NVIDIA. I mean, we just continue to pound the table in NVIDIA. Stock's coming down, great opportunity.
And
that's fractionals.
And Annie Gauss wrote that she believes that Twitch could be Amazon's secret weapon.
Well, Amazon Web Services is a secret weapon, and how much business all these IPOs have, and we'll be talking about that constantly in Action Alerts. But when you look at the Lyft prospectus and the Pinterest prospectus, they talk about how much money they pay Amazon Web Services. It's a great window into a rather opaque story. Makes you feel like you want to buy Amazon in any weakness.
And I want to ask you, I've been doing a lot of research on this, and one thing that I found is that esports has so many open windows for investors to invest in, whether it's software, hardware, et cetera, et cetera. Do you agree with that?
Yeah, look, I mean, it's a secular trend of growth that got derailed by China putting a limit on video games. And we're trying to, if China would undo that limit, I think you would see a much more bullish story than we currently see.
All right, Jim, that does it for our show today. If you're watching us on Facebook or on TheStreet.com, we're now jumping over to our Action Alerts Plus members-only show. Today, Jim will be giving his take on Viacom and more holdings in his Action Alerts Plus portfolio. You can check it out at actionalertsplus.com.